Bala sir and all the participants attending this webinar. A very warm welcome to all the participants joining us today for this insightful session organized by Team Mehta and Mehta on the topic analysis of selected adjudication orders passed by Registrar of Companies vis-a-vis the role of Company Secretary. So this discussion is particularly relevant in the current regulatory landscape where ROC has been increasingly proactive in enforcing compliances under the Companies Act, and as professionals understanding the rationale behind the adjudication orders and the evolving expectations from the professionals, particularly company secretaries, is crucial for strengthening the governance and ensuring the robust compliance frameworks. It is my privilege to introduce today's dedicated desi- uh, presenter, Professor R. Balakrishnan. Professor Balakrishnan is a company secretary with nearly 4 decades of experience in the field of secretarial and compliance, corporate compliances. He has been associated with Foseco India Limited and has contributed extensively to the profession through his lectures and writings. He is also a regular speaker at ICSI Center for Corporate Governance, Research and Training, and his thought-provoking articles are frequently featured in the professional publications such as the Chartered Secretary Journal of ICSI. We are truly honored to have him with us today to share his valuable insights and practical interpretations of adjudication orders and to guide us on how company secretaries can play a proactive role in this. Yeah. Thank you, sir. Over to you, Balas.
Good morning to all of you. I have a partly welcome to all of you. This topic is actually a repeated session. Once again, we are discussing it. The way, as Ronak puts it very clearly, ROCs are nowadays looking into various aspects. It is really allowing because nowadays digitalization has taken place on the online. They can actually see most of the things are all picked up from the online filing. And they continuously wanted to emphasize the compliance. They are not interested in penalize the company. They want to ensure the compliances, even the late compliance is better than the non-compliance. So let me take you through what is our profession is all about it, what can go wrong, and how do we actually overcome, what is the solution available for this, how can we take precautions. And I also take you through some of the selective ROC orders so that we can understand what sort of the non-compliances, defaults, which are actually happening either with or without intention, accidentally, whatever it is. That is the whole idea today. Let me start with the quote. You all may be knowing that Peter Drucker, one of the management guru, he said actually doing the right thing is more important than doing the things right. It has got a much relevance because efficiency is doing the things right, whereas the effectiveness is coming, doing the right thing actually. So that is what I wanted to start with it. So if you look at the company secretary, there are, as you are aware, there are either you can choose to be a employee company secretary full-time assigned to a particular company, or you can be a practicing company secretary rendering services to various organizations. If you are an employee company secretary, then you have to get to know the complex of the business environment of that company. And role is becoming very increasingly tougher and tougher nowadays with a more responsibility. Very recently, in the last December, listed companies, especially the LODR regulation, has been amended in respect of the company secretary, both in employment. It has been amended for PCS. Much before that, it has been amended for employee company secretary. The lawmakers recognizes the company secretary position is one level below the top management. That is what, as per the profession goes. Whatever management hierarchy, whatever your grade, whatever you are, but as per the matters of secretary is concerned, you are actually reporting one level below the board. That's what it has come. As per the PCS is concerned, now PCS has been actually recognized, that is secretarial auditor, along with the line of the statutory auditor. The appointment has to be done by the shareholders of the company in the annual general meeting. And his term is 5 years at a time. Similar lines with the statutory auditors. So recognitions are coming one side. On the other side, it is a business complex. Our responsibility is becoming more and more. We need to ensure a smooth functioning of an organization wherever we are serving. It is not only ensuring the compliance under the Companies Act alone, but also seeing that compliance is made in respect of all the other acts which are applicable as well. That is the responsibility we hold actually in the employee company secretary. Coming to practicing side, there are major areas which are available for PCS. I don't have to elaborate. You can be a strategic advisor. You can be a consultant. You can get associated, various merger, amalgamation, etc. You can represent various authorities, especially ROC, RD, NCLT, SEBI, SAT, RBI, etc. Restructuring processes, professional assistance, all those things which are actually there. In addition to that, PCS also required to certify pre-certification and certain event-based certifications, annual returns, all those things which are also there actually. A company secretary is a very, very vast area which we are all aware. Really, if you look at the profession has really gone much beyond what we have seen early 80s, immediately after the Company Secretaries Act has come. From there onwards, I have been watching this actually. So really speaking, in not only in India, but also across the world, we have been recognized more and more. Nowadays, we are recognized as a governance professional rather than the company secretary or chartered secretary. Many of the institute like UK Institute, Australian Institute, even the Malaysian Institute, all these people have changed their institute's name itself as a governance institute, and the company secretary has been awarded as a governance professional instead of chartered secretary or company secretary. I think days is not far away for our institute also to recognize this will actually come. Only thing is, as you are all aware, we all need to work, whether it is profession or it is in practice, we have to ensure the absolute compliance. Because when the compliance comes, okay, as per the employee is concerned, he is actually complying with the company where he is serving. But where the company secretary is not required to be appointed, it is more so in the private companies which are having capital less than the threshold limit, that is 10 crores. Then what happens is the practicing company secretaries who are rendering a service. So in such a case, they have a larger responsibility to see these companies actually comply with the requirements. So the role becomes very more important for the practicing company secretary to see the compliance is taken care of in the companies where the company secretaries are not required to be employed. This is the thing. So as you are aware, we are all working with the checklist. We are all working with the maker-checker system. We are all actually get updated with our provisions, latest amendments, so that, we can correctly interpret the law, we can correctly advise, we can correctly ensure all the things can be actually done. That is the profession shortly about it. But only thing is, when it's come to private companies, I'll take you through the orders, you will realize there are a lot of trivial things which are actually coming up as a non-compliant. So especially the minutes recording, minutes maintenance, statutory register, etc., and other things. The company secretary cannot afford to say, I'm only a company secretary, people below me are doing the job. No, he has to get involved. He has to see. This is what it is actually required. Ultimately, he is not only a company secretary, he is also recognized compliance officer, KMP, and he is an expert in the field. All those recognitions are there. So naturally, both in employee and practice, we have to be taking utmost care and ensure absolute compliance. To be very frank with you, how the regulator looks upon the company secretary, that is very important. Because many of you may be aware, ROC has been passing the orders, and very frequently they are particularly referring the role of the company secretaries, and they are referring the orders also. If you actually look at the order which has happened in South, that is the regional director of Southern region, one of the companies where they have passed an order way back in 2022. It is regarding to the Madras Fertilizers Limited company, where the company actually distributed the gifts during the annual general meeting. as you are aware, the gift distribution is prohibited under the Companies Act. It is elaborated in the Secretary Standard 1 also. It is the responsibility of the Company Secretary to ensure. SS2 very clearly says that. Now, what had happened in this particular case? The ROC has passed an order and he levied the penalty upon the directors and the company to the tune of 35,000 rupees. The company felt it is actually little more. They said, okay, they will make an appeal against. When the appeal went to the RD has actually looked at it and he categorically set aside the order passed by the ROC, saying that the responsibility of the compliance rests only and only with the company secretary, not with the company and the other directors. So he set aside the order against the company and the directors. He issued instructions to ROC to take a separate action, issuing a notice to company secretary and company secretary alone, because he is the person who has to take utmost care and ensure the compliances. That is what the order which is actually has come. So that means ROC is that RD is ROC, they are recognizing it is the responsibility of the company secretary to ensure compliance. You will be liking to go through the orders. Order is a very, very speaking order. It very clearly spelled out all the company secretary appointed, the managing director, full-time director are expected to assume company secretary will take the responsibility and ensure the compliance. That is what the speaking order is actually. So that means it goes beyond doubt how the regulators are looking upon our profession, which is actually coming out in this particular case. So ultimately, this is what it has happened in this particular case. If you ask me, coming to role of the practicing company secretary, again, we got another case. Many cases are there. I'm just citing one of the case, which has actually happened with the Sun Pharmaceutical. In the Sun Pharmaceutical, it is regarding the related party transactions. The secretarial auditor has not brought out the non-compliance relating to the related party transactions, specifically section 188. So when this has happened, actually, ROC has issued the notice and he has come out. And he actually took a plea saying that, the statutory auditor report was not talking anything about that. So I have relied upon the practicing auditors, the statutory auditor's certificate. Relying upon that, I thought everything is okay. That is the reason why I have not commented anything on that. I thought everything is in order. That's what he said. But here what has happened, the ROC has actually gone very clearly in one step and saying that there is no doubt you can refer the other professional certification, opinion, etc., whatever is there. But as a secretarial auditor, he is actually expected to ensure his responsibility of forming an independent opinion, supporting the evidence, and maintaining the necessary audit trail. That is what he actually brought out. And not only that, you will be surprised to note this order is a very speaking order running about 15 pages, which actually talk about what is the company secretary in practice is supposed to do. He has taken a reference of the guidance note issued by our Institute of Company Secretaries of India. He actually mentioned all the things I mentioned. He is supposed to be the related party transaction, excessive managerial elimination, insider trading, intercompany transaction, IPO fraud, various Ponzi scheme, deposit, transfer. All these things is listed down actually. He said the guidance note and checklist which is issued by the institute is of paramount importance. You failed to do that. You are not done by that what is required. The related party transaction was not actually brought out in your secretarial audit report. You have done a gross negligence in professionally discharging your duty. This is what he has actually brought out in the process. Ultimately, he has been penalized 1,50,000 rupees on this. This is what it has happened. Similarly, in case of the SR Shipping Corporation, also secretarial auditor is actually not reported. Certain things like in minute book, board meeting, audit committee, separate minute book are not maintained. All those things which is actually brought out, which is not pointed out by him. So there also he was actually penalized. So if you look at it, how the regulators are looking, how the profession is going, it shows very clearly the paramount importance for both on company secretary and as well as practicing company secretary, both I would say. really we got a greater role to play. Probably what could possibly go wrong? Most of the thing, if you look at it, many non-compliances are happening in a companies, mostly the private companies. Lot of them, and especially those private companies where the company secretaries are actually not there, where the company secretaries practicing people who are actually taking care of the compliances in those companies. This is where it is happening. So really speaking, I really personally have a feeling a company secretary should go little beyond what is expected. Suppose we are assigned particular job, we have a duty to tell the company, look here, I'll give you a checklist. You go through this. Wherever you need the support, I am always there. But you ensure this. Because the directors who are there, they are not actually doing what is the company side, what is the provision, what is the section. If you say section, we know the numbers, what is the section number. But as per the number is concerned, these are simply mathematical number for them. They don't understand anything. So really seeing, we'll have to tell them, we'll have to educate them, and we'll have to ensure ultimately the compliance is rest with the company secretaries. That's what I would say actually. You look at what is actually going on. If I take the agenda and minutes related item, agenda is issued without adequate document. Enclosure is not there. Disclosure not taken on record, MVP1 on the minutes. Not recording the date and place on the last page of the minutes. Unnumbered meetings. Pages are not getting initial. Blank pages are not actually scored out or initial. Last page is also initial at time, not fully signed. All the things which are actually coming across here. Similarly, if you look at the procedural lapses, again, there is a non-constitution of the board committee, that means audit committee, nomination committee, CSR committee, etc. Even if the committees are constituted wrong constitution, required number of the independent directors are not there where it is actually called for. And disclosure given by the director not taken by the board. When the disclosure are given one side, A, not given, B, even if it is given, not taken. Then the non-appointment of the internal auditor, secretarial auditor, ID, and women director, all those things which are actually we are coming across really in these cases. And again, continuing with the agenda, minutes are not signed at times. Date and entry, when it is made in the book, that is not made. Draft minutes are not circulated as required. KUC is not done, which is resulting non-filing of the form, delayed filing of the form, etc., and other things. Similarly, if you go to the procedural lapses, board report, there are a lot of things which are required to be disclosed, not disclosed. And again, internal auditors appointment, secretarial auditor, we spoke about it. All those things which are actually happening here. So why it is all happening? Yeah, probably, the private company wants to become a public company, or private company cross the limit, it is coming at the threshold limit, all these requirement comes, who has to educate? It is only the practicing people who are entering the service. That's what I'll come to that actually. And again, at time, dividend is declared, it is not transferred within 5 days. Please remember, dividend is required to be transferred within 5 days only, not 5 working days. Even if Saturday, Sunday comes, then that is also counted. In which case, whenever you declare a dividend, you have to see the available bank number of days are actually available for doing the thing so that non-compliant take place. It's quite a good amount of the planning is actually required here. Now, many times I also see beneficial interest ownership declaration not filed, even not taken. Even after taken, it is not filed. Separate bank accounts not open for receiving the application money, either going for the private placement or preferential allotment, etc. Other things are. Funds raised are at time utilized before the allotment of the securities, before filing of the allotment return. Various filing errors are happening. Whenever the annual return is filed, cash flow is actually missed out. When you say annual financial statement, it is actually the balance sheet, profit and loss account, and as well as cash flow. Cash flow is left out. Even unsigned reports are getting filed. And annual returns are filed without signature. All the things which are actually happening, which we are coming across. So you see the type of the errors, type of the things which are actually happening here. This is one thing. late filing or uses due to slow system. Item also will penalize. Please suggest. Yeah, you are actually finding out it is right actually. In fact, what happens is whenever the system mistake take place, if they realize there is a inordinate system mistake take place, they actually give you a necessary extension filing. All those things are actually done. But yes, hiccups are there, especially after the V3. That has been actually seen. This is one of the concern which has been raised by our institute or many people also. I do agree with that. That is the way it is working, but we'll have to live with the system. We'll have to actually keep a constant check. We'll have to ensure that that's what we'll have to do it. Because at time I have seen they have given actually extension because of the system failure, etc. and other things. That's also given by the regulator at times. So what is the solution? I think you are maybe aware what is the solution. Solution is two things. One is if the filing is missed out, is there a possibility that we can file the late filing by paying the additional fees? Yes. Wherever it is the late filing is possible, yes, we can do that actually. That is one method. Second thing is there, okay, we are not able to file it. There is a valid reason or whatever it is, etc. We can straight away apply for the continuation of delay and get the approval from the central government, and we can set right the non-compliances. Or alternatively, we can file a sumoto adjudication application because most of the thing now from compounding has been now gone after the decriminalization. Most of the things are all coming under the adjudication only, except those cases which are falling under Section 441. So those things can be done. That means the route available to us: A, examine the possibility of the late filing. B, try to get the continuation application. C, get the sumoto application, because when you file a sumoto application, show the intention that we want to be compliant company. We don't want to get, we want to set right the things. So definitely people will look at a lenient view wherever the law actually gives the leverage. There are sometimes, many cases, there is a fixed penalty there, but there's some cases, not more than between those cases, the ROC actually take a lenient view that is there. And lastly, the compounding, wherever the compounding is actually called for, that is another way which one can actually do it. Beneficial data which is not applicable, then also some companies are very filing director as beneficial person. See, beneficial interest, when it comes to it, the company secretary has to identify, because there are criteria which are there bearing this beneficial interest. You have to analyze beneficial interest. If you are falling within the norm, yes, you have to actually do it. Otherwise, you cannot do it. How to file the sumoto application form? It is a GNL1 form. You have to make out an application in a legal paper, and you have to spell out what has gone wrong, what is that. You would like to seek the adjudication on this particular matter, spelling out what all the things which has actually happened. And then you file in GNL1 form or online, and the physical copy is required to be submitted to the ROC's office after the filing of the form. Then ROC takes it, and then he takes it forward actually. But he will call for a, what you call, either he will issue a show cause notice and he will call for a personal hearing, or if things are very clear, etc. If you don't want the personal hearing is to be there, then personal hearing is dispensed with. Then accordingly he passes an order. That is what is actually happening. Where the company is not for the MSME form offerly written, either the delayed fees. MSME forms, I'm not very much aware actually, but the only thing is here, there are some cases where the form has not been filed, etc. They have taken an action, I think. This provision we'll have to specifically see actually. Because MSME forms is required to be filed periodically. Once the period is lost, the thing is not actually. If annual filing is said, should be initiate the kind of this, there is like a fear, but officer may interfere again and again. No, the annual filing is coming, we are referring annual filing. There are two things. One is the annual financial statements and the annual return. Law is actually given a leeway for this. If the annual filing is not done, you will be able to file it, actually the annual filing on your own. That is number one. Number two, even if he issues the show cause notice, if you are able to file it within 30 days from the issue of the show cause notice also, then it is actually taken the complaint. No action will be taken by the officer. There is a leeway is actually given by the regulator on this, especially for annual return and annual financial statements. which they have actually given here. This is a show cause notice. We want to pay the penalty. What is the procedure for that? If you received the show cause notice, then you have to actually reply to the show cause notice stating that yes, you accept whatever the non-compliance is actually find out, or you are willing to pay the fees. You can actually request for the personal hearing and you can ask him to adjudicate the matter. You can reply, then immediately he will issue a personal hearing notice. You appear in the personal hearing notice, whatever you would like to say in the personal hearing, you can please say so. Then he passes the adjudication order. That is the way it goes about it. Or if you are convinced that there is a personal hearing is not required, what you have stated is there, based on that, he can pass the adjudication order. You can actually request that we don't the personal hearing on this particular matter. We accept whatever the non-compliance happen. You can pass the adjudication order. You can actually write it and submit to him. Then that will take care of it. He will pass the adjudication order accordingly. That is what the procedure is there actually there. Can the company use an existing zero balance account for the purpose of preferential allotment? You see, the whole idea is zero balance account in the sense when they say separate bank account. Earlier we used to be renaming the bank account actually. Now I don't know, the banks are not permitting, I believe, according to me. Because the whole idea is they want to establish you received the money separately. It is accounted separately. That is the whole purpose here. If we can establish that when it comes, then that is possible. Otherwise, it is very difficult. It is actually better. What is the thing? Nowadays, account opening and all the things doesn't cost anything. Just to open an account, get the money. What the purpose are, you can even close the accounts also. That is the thing. What are the consequences of non-filing of the MSC return? Yeah, you can be penalized because it is actually coming. There are some cases out there. There will be a penalty will be levied by the ROC. It will be seriously looked upon. This MSC non-compliance is actually a non-compliance. So this is a provision. You will be penalized, daily speaking. But the penalty payment date has lapsed. What can be done? Penalty once the ROC order is actually passed, the penalty is required to be there within the specified time, then only order will be issued. If that is not the case, you have to talk to them. You can take the exception. You can always pay the penalty when it is done. That's not a big issue, but only thing is you have to talk to them. This is what it is. So really, these are all the ways which are actually available for us to sort out the matter. So when you talk about the continuation of delay, then you have to actually go for the belated filing of the forms, or because we miss out MGT7, we miss out AOC 4, 92, 137. But anyway, annual return, there is actually a provision is there. If these are all the things are all happening, we can take care of it. But in case of the other forms, if you not filed, there's a delayed period is actually lapsed, even the extended period, then we can apply to the central government. There's a CG1 form is there actually. You have to make an application and it is handled at the Delhi. And you have to represent, you have to put your merits on this. So there should be a board meeting. You have to get the approval of the application for filing the continuation of delay, authorize a person. Generally, it is the company secretary or a practicing company secretary, wherever it is called for, appear on behalf of the company. Then application of the continuation of delay is filed. Then the certified true copy of the board resolution, authorization, etc. Then you have to give the elaborate reason why you are seeking the delay, and then affidavit indemnifying the petition and memorandum of appearance, authorization, etc., which is to be filed. All it is done. Then what happens is CG will actually scrutinize. He will issue a personal hearing notice to you. When the personal hearing notice is appeared, then you appear before him, you are given the continuation of delay, you'll be able to file the form. That is one thing which can be done. But when you come to the adjudication process, again, what happens? There are two things. One is either the show cause notice issued by the adjudication officer. That is one thing. Once the notice issued, he will give you the time, 15 days, 30 days. Maybe he can extend upon the genuine cases sometime, not more than 15 days or something like that. Or you can file the sumoto application also. In such case also, you'll issue a show cause. Then once this happens, you submit the reply. Then he actually take a call whether personal appearance is required or personal appearance not required, depending upon the reply, what is actually provided. Then if the personal attendance is required, personal hearing, the interest of natural justice, he actually gives you at least a day, a week or 10 days notice. He gives you the personal hearing notice. And then once you appear in the personal hearing notice, then he actually hears you and accordingly take a call, he decides and he passes an order. Once he passes an order, then in which case what has happened is, one thing is there. If you decide not to reply, suppose order he issues a note and then you're not issuing the show cause notice, is no reply is received, or 90 days time you don't appear at all, in such a cases, that's a problem. He passes order. he'll pass what you call ex parte order in the absence of use. But one thing is that whatever he passes an order, you have a remedy. It can be applied against the appeal if you feel, there is a genuine reason he's actually levied you, he's penalized you more for various reasons. Because ROC may not have the power to go beyond what is prescribed in the law, whereas the RD has got the power to revise the fees penalty levied by the ROC. So you can actually apply to the RD who's having a jurisdiction prospectively either Western region or Southern region or Northern region or Northwestern region, depending upon the ROC, whatever is there. And then you can actually apply for the appeal. Then again, you follow the appeal. Then if the genuine things are there, you will also call for the personal hearing. You will be given the opportunity. Then you will explain those things can happen. But here in the adjudication, what happened, when the personal hearing is there, then you state whatever you would like to say, etc. And all those things, as somebody puts it, there is a reason for system is not working during that period, etc. If you can actually exhibit, because you might have received the reports on the online itself saying, system is not working, we are not able to do all those things are there, you should preserve all those things. If we can establish that, then in which case he can actually given relief taking into consideration if that was the real case which has happened, that also can be done. Apart from that, if you have any other submission, you can make it. But the only thing is ROC will pass on speaking order. He will say, what is the reason why, what is the non-compliance, why he is levying the penalty, what is the rationale behind the penalty. That is what he will actually do. He will issue the order. Compounding nowadays is very, very less because as you are aware, certain things which are not compound. Because whenever the penalty, that means the penal action which is actually coming, they're very clearly saying, wherever the imprisonment is there, because it can be penalty along with the imprisonment, penalty or imprisonment, penalty and imprisonment, this and or make the difference. So if it is actually convertible, that means if the or is used, then it can be compounded. If the and is used, it cannot be. So the law says very clearly, not being an offense punishable with the imprisonment only, or punishable with the imprisonment and fine, it can be only compounded. And the maximum amount do not exceed 25 lakh rupees. It will be dealt by the regional directors. The limit is there. Beyond the 25 limits, you have to go to the NCLT. That is the jurisdiction which is actually. So this is applicable only cases where the criminal matters are there, where it is decriminalization or not taken places, it is there. Otherwise, most of the things which is there, even people who have filed the compounding application earlier, all this compounding application has been redirected to the respective ROC for adjudication, and they have adjudicated the order accordingly. This is what has happened. So offences which are not compoundable will be punishable with the imprisonment only, or with the imprisonment and also with the fine. That is very important. But if it is fine or imprisonment, then it is compoundable. Otherwise, it is imprisonment is involved, it is compoundable. It cannot be compounded. Where the investigation is initiated, then you cannot go for the compounding. And again, there is one more provision there. If the offense is committed by the company within a period of 3 years for the similar offense committed, it cannot be compounded. That means suppose you have made a compounding application for a particular section and the same thing is repeated within a period of 3 years, you cannot go for the second time compounding. That is what it says actually. That means it's within the section. That is the provision which is actually there. So how do we go for the continuation? Continuation, again, as you say, you have to go to the central government. So call for a board meeting. You have to observe all those secretarial standard, one giving a 7 days notice, giving the issues, etc., and other things and all those things. Pass a resolution for filing the application, authorize the person. Then prepare the compounding application, because the compounding application is required to be prepared as per the NCLT rules, which are actually specified for that. Then this has to be filed on the online in GNL1 form actually, electronically. Then it should be actually submitted to the ROC's office. In fact, if you are filing with the NCLT, a copy is also submitted to the NCLT actually. That is what normally people do it. It is a practice actually. It is along with the ROC submission, NOC submission also made. Document which will be called for a detailed petition, affidavit verifying the petition, memorandum of appearance, that is wakalatnama, and the board resolution certified copy, then authority, then evidence which is showing the offense which is actually made good, because you are expected to make the good offense actually. That is, then ROC, RD notice if it is received, any other relevant document. These are all the things which is required to be attached actually. So compounding, how it take place? Really speaking, you file an application. There are people who can file director, manager, CS or authorized person. Obviously, in case of the director, DIN, manager, secretary, PAN, other people, either PAN or the passport, if it is the overseas director, etc., which is actually called for as approved. Then again, application is a company, director, secretary, manager, or anybody authorized. Foreign company, then authorized representative, or any other individual, they can also actually file. There is no problem. But if they don't have the DSC, they can take the help of the practicing professional, either CAs, CS, or CMAs, etc. They can get it filed from them. Then, of course, hearing will be called for. If this already less than 25 lakh rupees, more than 25 lakh rupees NCLT, they will call for the hearing, and then you appear for the hearing, make your submissions, etc. Then ultimately they will pass an order. Then once the pass an order, penalty is required to be filed. INC 28 form is required to be filed within 7 days of getting the order. So these are all the things which are actually to be done in case of the compound. Then we come to the adjudication, which is actually the most common thing, which is now near 20,000 MGT7 pay later challan remained unpaid. In the year 2021, MGT7 pay later form remained unpaid due to the bank-related issues. After 5 years, recently it was found that the challan was unpaid. Whether ROC give will any concession in late fees as per day addition or fees will be very long. No, it's all depends upon, because depending upon if it is a continuing offense, then in such a case, the continuing offense per day penalty will be applicable along with the fixed penalty. And of course, there is a subject to maximum limit, again, depending upon the company. Then again, if it is a smaller company or startup company, etc., then subject to that 2 lakh rupees or something like that, that will be applicable. So that is what it will happen. Here also, you can actually go for the, without waiting for the so-called notice to be issued by the authorities, you can actually file a suboto application to them. This is what it has happened. You can explain, you can tell them, then accordingly you levy. But the only thing is, yes, there is a genuine stake, etc. is there. Once the ROC will not have the discrimination. ROC will go by exactly as per the section what is provided there, because he does not have the discretionary authority. Once the ROC issues the order, if you feel the fees are the penalty levied are excessive, you can make an application to the RD, and you can make up your genuineness in front of the RD. If it is a smaller company, if the turnover is less, if the constraints are there, if the people are not there, it's all those things, genuineness is established. He has got the discretion to reduce the penalty. RD can always, either reduce the penalty or he can waive off, he can settle, whatever it is that he can do, but it is all much will depend upon the case-to-case basis. But it is nevertheless, penalty will be levied, because it's after all the non-compliance is the non-compliance. That is the thing. Can we file the compounding application even the violation is not for adjudication? No. Compounding is only for the particular purposes where the compounding is called for. Otherwise, it is adjudication. Otherwise, everything will go in the adjudication, because in case of the adjudication, you actually pay the penalty. In case of the compounding, the fine is actually levied. So this is what it is actually called for here. So normally it is the adjudication. Even if you file the compounding application, if it is adjudicatable, it will be converted to adjudication and you will follow the adjudication procedure. That is what you will do. That's what I said in the beginning also. Earlier in the 1956 Act, when the decriminalization has not taken place, we used to have the special courts. So compounding application has been actually filed in the various courts. So what the decriminalization has done, the courts actually taken the look at it. What they have done is they have actually redirected all these applications to the ROC for the adjudication processes. Then ROC has taken the adjudication processes by issuing the notice. That is what it has actually happened place. In spite of person is actually necessary empty. Whether MR1 has to be filed subsequently, if yes, what would be the date of the appointment? See, MR1 again is actually a requirement applicable only in specified cases that you have to examine with reference to the procedure. MR1 is actually required. The time limit is already specified. You have to go by that. The date of appointment will be the date on which he is appointed actually a managing director, because it's the first date of the appointment will be the first date of the appointment. Do we apply for the ROC or condonation of application. No, please remember, condonation application is made to the central government in the CG1 form, which is actually going. The adjudication authority, the condonation authority is actually sitting at a Delhi ROC has been given the power. So what you need to do is you need to file the CG1 application form, which actually goes to the ROC at Delhi. Then either you know to have a person in Delhi, a practicing company secretary who can appear on behalf of you attend the personal hearing, or you need to go to Delhi and appear in front of the authorities and get the thing. It is dealt directly by the central government, a designated ROC at Delhi. But ROC does not have any condonation authority. ROC has got only the adjudication authority. Because as I said, condonation, it is central government. Adjudication, it is the ROC. If it is again appeal, it is filed to the GNL form, it is actually filed, but only thing is the filing is done actually respective ROC. He actually forwards to either to the RD's office or to the NCLT office, subject to that limit what we have mentioned. But only thing is once you file the GNL1 form, then you have to submit the physical document to the ROC's office, and then he will forward it actually. As I said, in case of the NCLT, normally it is the practice to file a copy along with the ROC filing also in the NVHC. That is what it is actually done. What is the procedure for compounding for penalty? Compounding is not the penalty. Compounding is actually a fine, because in case of the imprisonment where it can be converted, that is fine and imprisonment in such cases. Then again, you have to follow the same procedure. I think I actually mentioned here compounding application. If we go through it, I discuss here what are the offenses compoundable. Then this is a procedure. 1 minute. This is a procedure for compounding. You can say, just see this. Who can file? What are the requirement? And as I said, it is a CG1 form, and a hearing will take place. That is what I said actually here in case of the compounding. Having said that, let me quickly take you through some of the adjudication orders so that you will know what sort of the penalties are levied by the ROC, what sort of the mistake is actually happened. That is what it is. As I said, it is mainly happening in the private companies. That too also the private companies where the company secretaries are not required to be appointed. That means in the absence of the company secretary, which is actually there. That is what is happening. Let us look at some of the cases. These are all the decided cases. Now what happened? There is a company called the Kudos Finance Investment Private Limited Company, ROC, Pune. Here what happened? DR toll could not be filed due to the KYC non-compliance and plus error in bill. This is what it has happened in this. Here again, there are no company secretaries there. Company has been penalized 50,000. 4 of the directors were penalized 10,000 rupees each. 20,000 rupees. Past directors, they were penalized 10,000 rupees for 2 directors. Remember one thing, whenever the offense is taken place, whether it is the KMP or director, whosoever it is there, even if he has resigned from the services, if he was actually holding the office at the time of occurrence of the offenses, then he is equally responsible for non-compliances and he will be also penalized. That is what it has happened in this particular case here actually. The past 2 directors have been penalized to the tune of 20,000. And in case of the Iron Steel Private Limited, it is again the Chennai order. What they have done is they have not maintained the distinct minute book for the meeting of the board in each of the committee. They have maintained 1 minute for everything together. SS1 Para 7.1.2 referred in the particular order where the secretary standard very clearly says there will be a separate minutes book or record to be maintained for each of the board and committees, which is actually there, which has not been done here. Here again, the company secretary is not there. Penalty levied company 25,000 rupees. 2 of the directors were there, being a private company, 5,000 rupees each, 10,000 rupees. That was the penalty, which is actually. Perhaps here, the practicing company secretary would have advised him, look here, this is what it is required, you do to maintain the separate books of accounts, etc. The problem would not have been arised. So that is what I said actually, we have to go little beyond the requirement of what is called for assigned job. We need to actually see, we need to educate them. Probably this could have been actually avoided. Similarly, the KFC also, whenever the company secretary should have actually told him KFC is required to be filed, he could have insisted you have done that. So this is what it has happened in this case. And in case of the Telecom Consumer Limited, the ROC Delhi order, if you actually look at it here, Again, the unnumbered meetings, minutes book, unsigned minutes, no meeting number and minutes book not mentioned. Date of signing the minutes is absent. All the things which has actually happened. These are all very trivial mistakes actually. Probably the practicing company you visit, you could have seen that, you could have got it rectified. All those things you could have done that, this could have been actually avoided here. Because it has happened not only 1 year, it has been happening consequently for about 3 years. So what they have done is company 25,000 rupees for 3 years, 75,000 rupees. Two of the directors, 5,000 each for 3 years. So 30,000 rupees. So 1,05,000 rupees. They have been actually levied the penalty. So these are all the things which are actually happening. Then again, default, a company is converted from public company to the private company. There are n number of compliances which has actually come because there is series of orders have been actually passed. It has happened in Buka Proteins Limited because it was a private limited company which is actually converted in the public limited company. So it is incorporated in 2010. It has been converted public in 2019 and 23. This order has been actually passed because the non-compliances is in section 135, 149, 177, 178. You are all aware what is it. 177, 178 is the committee requirement. 149 is the independent director. And 135 is actually the relating to CSR. This is what it has actually happened there because as you are aware, the 1/3 of the directors is to be independent director in this company. The company did not constitute the audit committee, nomination committee, remuneration committee. They did not appoint the independent director. They failed to constitute the CSR committee. All these things mistake which has actually arisen in this company. Because once the private company gets converted in the public company, then you need to work with this checklist, etc. Who will actually educate? Again, the company secretary would be called for. So in which case, who has to be educated? What they have done in this particular, they have realized the non-compliances and then they have filed the sumoto adjudication application for the multiple violations and they have admitted the violation which has actually happened. The order is actually passed by the ROC. This is what it has happened. We got delay in appointment. They appointed the independent director, but delayed appointment 775 days. This is what they have done. So company and the 4 directors, they are actually filed. Company 1 lakh, 4 directors, 1 lakh, 5 lakh rupees. Company 3 lakh rupees, 4 directors, 1 lakh rupees each. And then company secretary who was there for the period, 51,000 rupees. There was a past company secretary was also there, 1 lakh rupees. This is what has happened, around 9,51,000 they have to pay for the penalty. This is what they have done for non-appointment of the independent director. Then coming to the non-constitutional audit committee also, same thing. They have to pay about 2 lakh rupees in the similar way. Here, if you see company secretary, past company secretary is also involved. That is another issue. Then similarly for 178 also the similar, same amount. Again, the past company secretary and the company secretary, they were actually involved. Then section 135, again, the CSR committee, same, which has happened to the tune of 9,51,000. So really speaking, company has to spend out 38,65,000 rupees penalty. I got a question for you actually. When the penalty is levied on the company secretary, who pays the penalty? Who will bear the penalty? See, when you say company is fault, company is an artificial person. Company cannot do anything. Company cannot think itself because there are people who are actually assigned for the particular job. They are only doing it, isn't it? So in such a case, how can only company you pay actually? It is not the case. Because company is the artificial persons or anyway they are leviable, but the thing is whatever levied upon the individual people, either the director or company secretary, whatever it is, most of you has already answered. It is actually the company secretary here actually. So really speaking, if you see the ROC orders, is very clearly mentioned at the bottom of the order, the amount of the penalty levied is required to be paid individually by the people from out of their own income, out of their own source. That is what it is actually mentioned. So that means it actually goes from your pocket. The moment you do the non-compliances, you are actually paying for it. Company cannot reimburse you in any case. It is all verifiable actually. So that is the thing. So don't think that some mistake has happened. Company will take care of it. Company will pay. That will never happen actually. Because these are all actually payable from their own pocket, out of their own income. That is one thing. Somebody is actually referring the DNO. DNO is actually a good policy, but only thing is if you go by the terms and conditions of the DNO policy, DNO policy will take care of all the expenses relating to the litigation, lawyers' fees, incidental expenditure, etc., and all this thing. But to no way any DNO policy will actually reimburse the penalty levied on account of the negligence, non-compliance, whatever it is there. So please be very careful. DNO policy is there. It will take care of it. That cannot actually take care of it. You can take as in policy, but the thing is that will cover only the litigation cost, not the penalty. Actually, it should be there. Actually, that is one thing. CS should pay and company should reimburse. I doubt very much it cannot be, because once you reimburse, it becomes perquisite, added, etc. Another thing and all. When you say it is a own source of income out of your own pocket, then in case if it is very favorable, it is actually a problem. So these are all the things which are actually there. In fact, it is very clear about the order. If you actually go through any of the order, you can go through and you can actually find out. That is the thing. Okay, so I'm clear. I think if a company does not maintain the proper minutes book, and even after filing the, or even after telling the CS handling ignorance, where should one complain against the company ROC? See, if the company does not maintain proper minutes book, and even after telling the CS handling the ignorance, the question is, CS is the complaints officer. He is supposed to do it. If the CS not hearing it, the question is, company has always have a track action. He can replace the CS. Tell me one thing: which company would tolerate? The MCS system consists of the companies of the small companies based on the capital catering and the faults to take into account on the fact that they being holding are subsidiary companies. Consequently, the subsidiary companies are being considered as a MCS system as a small company, and hence these companies technically bound to take filing of in accordance with what allowed in the small companies, even though they are not example of filing MGT. For example, MGT 7 filing MGT 7, what is the liability of the company and its director in such cases? MCS system consists companies, small companies, black companies, etc. In fact, they be holding subsidiary companies. Consequently, the companies are being considered as the MCS system as a small company, and these companies are technically bound to make a filing in accordance with what is allowed in the small companies, even though they are not. No, question is not there. Law is very clear. Law says very clearly what is actually a small company, what is a startup company, what is the thing. In case of the holding company, subsidiary company, even the interpretation is there. If the holding and subsidiary company also, this provision I don't think will apply. You have to examine the particular case. In such cases, those companies will not be called as a small company. If the parent company is actually coming, it is having a subsidiary company, I don't think it will become a small company actually. That is the thing that you'll have to see, because the law is very, very clear. If you see, the law actually spells out the checks ROC. If you see, it is actually saying whether this company is a small company, whether it's a Section 8 company, whether it's a holding company, whether it's a subsidiary company, all the things are all actually taken care of. If any of the things are yes, then it will not be considered for the concession. That is there actually. I think most of you, I actually said it's actually a CS that is there. Yeah, that is right. The law is very clear. The MCA is actually technically not allowing the company to the MGT 7, it should be bound by the MCT 7. Yeah, see, 7 and 7A is the concession actually given. 7 is required to be filed other people. It's for the smaller company, it's the 7A. That is very clear. You have to go by what is actually provided in the law. So you see the glaring of the error which is actually happening in the companies, how the things are getting done. And second thing is, he can, the same company, I already said this. Then multiple non-compliances have been noticed in one of the company. There's a Emphasis Infotech India Limited. Here, if we actually look at it, what has happened in this particular company when they come for the inspection, this is what does happen. Register office is not. The one thing which I come across, really speaking, what happens is people actually take the register office in somebody else's places, etc. There is nobody virtually there. No nameplate is there. No visibility is there. Nothing is there. When an inspection takes place, nobody is there. So they come to the presumption that the register office is not paid. Even if the communication sent, it is actually returned back. No such address is actually found. In such a cases, the non-maintenance of the register office actually come for it. In this particular case, this is what happened. Register office not maintained, so they levied the penalty to the tune of about 4,50,000 rupees. They can levy the penalty in this particular case. And then statutory register not maintained. Naturally, if the register office itself is not very the statutory register, they have come to the conclusion 2 lakh rupees. And again, non-maintenance of board and AGM minutes, default in conducting the board meetings, non-submission of annual return, non-submission of financial. All the things has happened in this particular company. They have levied a penalty for about 39 lakh and 12,000 rupees. They say that. In fact, in this company, there were about 8 directors were there, and it has happened for multiple years. And accordingly, they have levied the penalty. That is what they have done here. If you actually look at it, the severe amount of the penalty which has happened. Similarly, in the India Bulls and Housing Finance Limited in Delhi, it is a case where what happened? Director actually made the disclosure in the MBP1 form. But only thing is the MBP1 form is not taken on the record. This is what it has happened. Although the MBP1 form has been actually filed, it is not taken on the record. In spite of company secretary being there, in spite of CFO is there, in this particular, what they have done is they have actually held responsible not only the company managing director, 3 directors, and the chief financial officer, a company secretary. That been came. This is what it has happened in this particular case. See, one thing is there, people, they have submitted the form, but instead of recording and taking on record, it has not taken place in this case. Then the next question which I came across is ID appointment taken place without registering the data bank. Because one thing, as you are aware, that a data bank entry is actually required for the ID. Whenever the ID is appointed, you need to have his name included in the data. Here is the Chennai ROC. Yes, was an order somewhere in the year 24. What has happened is they actually find the KCB Infra Limited ID is appointed, who was occupying in the audit committee and the nomination committee, etc. But his name is not there in the data. So company finalized 5 lakh rupees, empty finalized all that. This is what it has happened. But again, CFO was holding position in multiple companies actually. This order is actually passed by the Gwalior ROC. So what happens is he was actually occupying a City Development Corporation Limited Gwalior. He was born occupying position in more than one company. He has been actually penalized for that. Then similarly, private placement violations. Here, what has happened is ID and director, they were penalized. Because what happens is one of the company, which is very interesting case, it is one of the Plentify Capital Limited. I don't know whether you are aware or not. What they have done, they have actually made use of the online invitation of the form through agencies. And when they got for the online invitation, they exceeded the specified number of people inviting the people. That is what it has happened. The board has actually given the consent to do that, whereas the ID is also part of it. Because since it is processed, the board processes, the consent has been given by the IDs where the violation happened because of the online invitations exceeding the specified number of papers for the private placement. The company penalized 2 crores, CEO penalized 2 crores, non-executive director penalized 1 crore, and 2 IDs, independent directors, they have penalized 1 crore each, 2 crore, total 7 crores is the penalty. See the amount of the penalty which is actually happening. The non-appointment of the secretarial auditor has happened for the period of 6 years actually in one of the company in Jaipur, Interlink exposed. So here again, 2 lakh rupees each. They have actually penalized. In this case, the company secretary was not there, but the KMP was there, CFO. So company has been penalized, CEO has been penalized, CFO has been penalized actually. See the amount of the violation, see the amount of the people holding, see the amount of the penalty which is actually happening here. If a company is taken across the new management or other management, if the company has been taken acquired by the management and the other management has not numbered minutes, then the newly recorded management start numbering it now, minutes book from the day when first numbering was held. Yeah, you can start doing it. You see, one thing is there, you cannot retrospectively do the thing. So far, whatever has happened is okay. But the thing is, when you are acquired a new thing, when you start maintaining it, you can start doing it immediately with the immediately prospective effect. Whatever happened in the past, then in which case, what happened if the inspection, etc., take place, they go through it, they will actually issue the past people will be responsible for that. They will be called upon. They will be facing the penalty. If you are intact from today onwards, you are actually safe. You should do that actually. With the appointment of the officer in default under section 260 filing the GNL 3 have the other directorship from penalty for non-compliance if any. And also whether the whole time directors are saved for non-compliance when there is a officer in default. You see, if you actually go by 260, very clearly it says who are the officers on default. It is very clearly mentioned. If you actually pass the resolutions, if you are saying that he is the person who is actually designated as officer in default, and he will be responsible for all those things, if the GNR1 form has been filed, then in which case, yes, what you are saying is very correct. Journal 3 is actually filed specifying who is the officer in default. Generally, it is the managing director is actually made as officer in default for all the matters. Along with the managing director, company secretary also will be there. Then in which case, other whole-time directors will not be responsible for that because you have filed a journal on form specifying that he is an officer in default. Yes, there are cases like that. It will hold through, but only thing is journal 3 form should be there. That is right. You are very correct in saying that. I also seen the cases. In fact, ROC goes through the scrutiny. He actually finds out whether GNL 3 form is actually there. If the officer in default has been designated by the company, then he goes by that. If that is not the case, then he goes by who are the people. He goes by the full-time director and managing director. Independent director, they are actually having a exemption, which is given. They are given a what you call. They are not involved in the day-to-day affair, etc., and other things, and all those things. Then, of course, KMP, depending upon company secretary, invariably will be there. And of course, at time the CFO is also taken. He actually goes through by that. He identified department. Most of the orders actually says these are the officers identified by the ROC as a officer at default. And most of the cases he spells out so many directors are there, but after that the company has filed the general form specifying he the officers in default. So I go by that. That's what he says actually in the order. Let us look at the cases pertaining to the secretarial matter. Delay in commencement certificate. As you are all aware, the commencement certificate is required to be actually filed after the company is actually incorporated within the period of 180 days. So here the Veena Energy Limited, they have not filed the commencement certificate. So they have penalized the company and also 4 of the directors. So total amount is about 3,50,000. Then again, the register office is not maintained. Kobe Medical Center. In this particular, it's a very clear case, very, peculiar case. What they have done, they have actually gone and taken, care of post box. They applied for the post box and they have taken the care of post box. They are not maintained the register office. They thought that will serve the purpose. That is what they have done actually. And then ultimately, when the personal hearing has been called, they had put various reasons. We have been not allotted the place. We are not given those things are there. But ROC said whatever it is, a place is required, designated place, etc. Post box, care of post box cannot operate as the register office of the company. Care of post box can be for receiving the communication, etc. But nevertheless, the register office's maintenance is required. That is what it said. So company and the 4 of the director, even the KMPs, that means not only the CS and CFO, but also the ex-CFO is also actually penalized to the trade of 8 lakh rupees in this case. It's a very interesting case which has actually happened. Similarly, we come across another thing. What has happened is, although the company is actually maintained, everything is there, somehow or other, the letterhead, they are not mentioned the register office of the address SIN number of the company, which is a requirement. So in this case, which has not happened. So here what has happened, a company, a Bangalore-based company, they have been actually penalized by not mentioning the register office, SIN number, etc. in NISCO Agritech Bangalore, India Private Limited. Now tell me again, in this case, a practicing company secretary would be entering the responsibility, he would have done everything, companies incorporated, register office obtained, SIN number obtained. Is it not? He should simply tell, please have all these letterheads and communication, etc. printed. They should have been avoided. Don't you think so? No, if the numbering is not done earlier, you can start with 1 today. There is no problem because numbering, you can start, either you can say, have the continuous numbering or you can get the numbering for the year, whatever it is decided, it is left to you actually. So you can start the number, previous minutes, you can leave it like that because you are acquired from the other companies. Let it be there. Don't touch anything. Keep it like that only. Don't alter anything. Because retrospectively, you should not do any correction. From today onward, you start following the system. Whatever happened in the past, if it comes there, okay. The past people will be responsible. They'll be called upon. They'll be answerable. Again, we have come across not sending out the proper notice for the board meeting. It has happened in Madhyam Agriculture Limited in the ROC, Pune. This is one thing. And the notice issued AGM without the financial and audit report. There also this thing is a Delhi case which has actually happened. And again, failure to make explanatory statement when it is issued for the AGM. You have to appoint the ID, you have to make a necessary disclosure regarding to them. They are fulfilling the independent director's condition, etc. and all things which has not been made. So in such a cases, the company, MD, WTD and KMP and even the past CS, they have been actually penalized in such cases. See the amount. We are doing the job, but at the same time, it is incomplete. It is actually, not accompanying the required enclosures, not disclosing the things, etc. All those things are there. So naturally, you have to work with some sort of the checklist, some sort of the maker checker things, etc. That is what you have to do it, really speak. And then you see not holding the board meeting within 120 days. It is a very given factor. Law says very clearly, you need to hold the board meeting, not exceeding the gap of 120 days. Somebody is keep a track and to do it actually, which has not happened in this particular case. So here it is actually again the Delhi, one of the company which is in Haryana. They have passed an order for this because they levied about 1,60,000 rupees, including CS, past CS, CFO, all those people, they have levied the penalty in this case. Similarly, for the ex-directors in another company, which has actually happened, penalty went up to 3 lakh rupees per place. And again, minutes, blank pages are not scored out. Very simple things. Here also the penalty they'll have to pay again. Who's involved? Company secretary is there in this company. Company secretary, CFO, to other directors, they were actually there. This is what it has happened. See the amount of the mistake. I am really paid to see this sort of things really speaking, whatever increasingly, which is happening more so in the private company. And one of the companies, this Sitaram Maharaj company, they conducted the poll. The ROC issued a very speaking order. After going through this, they said important transaction not approved or not recorded in the list. Minutes is not serially numbered. Purchase of the vehicle by the company not been recorded. Detail of advance or loan given to the various group parties have not been recorded. Detail of the remuneration of director not approved by the board, not been recorded. Detail of the employee engaged in the company but not been approved by the board. That means KP appointments. Detail of the loan borrowed from the banks and other parties has not been recorded. Detail of the collection or fund through the private placement from farmers are not recorded. Detail of investment accepted from the group company LLP, which has not been recorded. All these non-compliances they have actually come across. They have been okay. Let us look into some of the board-related issues. Board report. Board report, as you are aware, in fact, to be very frank with you, many of you would be aware. Our institute has actually issued very elaborate guidance notes on the board. I hope you are all aware. Am I correct? Guidance note is available on the board report. Even the section 134 subsection spells out what are the various things should be included in the board. So we have everything actually there. So what happens? We don't follow this. So it happened the non-attachment of the secretary audit report along with the board report, which is one of the requirement the company has actually. They appoint the secretary auditor, they obtain the secretariat report, but only thing is they are not attached the secretary auditors. So something around 36 rupees has been levied. It has been happening for the last 6 years in this particular company. This is what they have. And again, the material events which has actually happened, which is required to be disclosed under section 134 subsection 3, they are not to actually categorically spell out what are the material event which has happened. So that has not been brought out in the Lava International Limited, a Delhi-based company. So here again, the company directors and the KMP, CS and the CFO, they were actually penalized here. The total penalty about 5 lakh. And similarly, incorrect director responsibility statement. This is one of the things. Who drops actually a director responsibility statement? Board report, who dropped it? So this is what has happened here again. The two of the directors at the company, they have been penalized to the tune of 4 lakh. This is what it has happened in case of the board. And again, unsigned annexures filed with the board report. This has happened actually. And again, they are not disclosed the related party transaction in the board. Because as you are aware, related party transactions required to be disclosed. AOC2 form is actually separate to be filed actually. Here that is not happening. And again, the auditor disqualification, which is actually not addressed by the company in its board report actually. It is a Chennai-based company. So there are 3 directors. It has been happening for the last 3 years. They are levied to the tune of 50 lakh. See the amount of the non-compliances which are actually happening. Yeah. Okay, we move forward. This subsidiary company. Subsidiary company details are required to be reported in the board report. They reported incorrect disclosure about the subsidiary company actually. That is what they have done here. In numbering of director report is incorrect. For example, 4th director report on 2017 and 2018 into the 4th director report and so on 4-5 years. Then how can be corrected? You cannot correct it actually. With the wrong numbering, there are 2 things. Either you have to go for the sumoto adjudication and file, you have to admit your mistake. It has happened and get it adjudication the matter. That is one way. Or otherwise, if you don't go for the adjudication, if the ROC finds out upon his routine inspection, because everything is available on the online, if they go through it, if they find out, they will issue the show cause notice. Then once the show cause notice is there, you have to accept the fact and accordingly you will be penalized to that. It is there. I have seen cases like that also in the past. It is there actually. You cannot correct it. How can we correct it retrospectively? Retrospectively, we cannot correct anything because the document is already filed. It is gone to the ROC. There is no way that we can call for the document and rectify. There is no procedure is there. Only thing is the reopening of the annual financial statement in the extraordinary circumstances are only permitted. Otherwise, it is not. So that is the thing. So again, the incorrect disclosure, the related subsidiary company matter where the company has been actually penalized, and CSR details. This is very much, when we come to the CSR, it is one particular section read with the rules, section 135. So here what happens is the CSR details is actually not disclosed at all. That is what they have done in this company. So naturally, the total penalty has been actually levied in this company to the tune of 5 lakh rupees for such a thing. 4 lakhs on the company and 1 lakh rupees on MT and 1 lakh rupees on CS. That is what they have actually. Then again, every company in their board report, they'll have to disclose what you call the employee details and the power-related detail, technical absorption and foreign earnings and outgo. These are all the things which are required to be done, which is not actually disclosed. In such a cases, also the ROC Ahmedabad has actually levied the penalty for that. See the amount of the way things are happening actually when you drop the board. We have material, we have the Companies Act, which is actually spelling out what are the details very clearly. If you go through the section 134 subsection 3, it says what are the things to be included. Extraordinary guidance note has been issued. Very elaborate guidance note has been issued by our institute actually. But the problem is we are not getting educated. We are not actually doing it. These are all the things which is actually happening. Seems to be a Hitler regime as part of the public are not interested as a representation against this dictator. Seems to be in Hitler region as a private limited company and public limited company interested case for respective against this dictatorship. There is no question of dictatorship, etc. I don't get into this. See, compliance is after all the compliances. Let us understand one thing very clearly. When the company is incorporated under the Companies Act, we are bound by complying, adhering the provision which are under the Companies Act, because companies are under the very same Companies Act. So in such a cases, yes, you'll have to comply with. By non-appointing the company secretary, not required to appoint the company secretary, does not give you relief for the non-compliance. Because yes, private company, there are certain concession has been actually given. Because, for example, you don't have to file the resolution passed by the board in case of the private limited company, which is required in the public limited company. Those concessions are actually there, actually. But the thing is, whatever within the given concession, without the thing, complaints is the complaint owners to ensure. So, in such a case, what happens is in the private companies, is a practicing company secretary who are rendering a service. They are actually helping the private company. Whenever they go there, they have to tell them, they'll have to give the checklist, they have to tell them this is what periodically they take up, they'll have to do that, because I will definitely tell this is equally the responsibility of the private practicing company secretary to ensure the compliances where they are entering a services for the company where the company secretary is not required to be employed. That is what I would say. It is not simply by taking a thing we are discharge our duty or it. For example, I come across company actually filed the return of allotment. There were error in the figures. It is certified by the practicing company secretary. When the notice was issued, practicing company secretary, the figures are given by the company secretary. They are actually begun, they digitally affect the signature. I had gone the board resolution. I have not verified the figure because I have taken the product is correct. How can he say he has to independently verify the figures? What do you mean by pre-certification? You are certifying the facts are true. That is the whole idea. What purpose is served by reporting the annual report, the number of transactions and compliant. You see, companies are doing various statistical collection information, etc. about the companies, and they are analyzing it, and it helps them to bring out various regulations, various relaxation, various things, etc. The purpose is there. There is nothing is done without the purpose. Let us not discuss what is the purpose is served, what is not the purpose is served, or something like that. It is there. Because annual report actually gives you at a glance what is the company, what is the shareholding pattern, who are actually holding, all those things which are actually there. So it is, everything is for the particular purpose. It is not the purpose or something like that. Because one thing is there very clear. Compliance is after all the compliances will have to ensure. Either it is the employee company secretary or practicing company secretary, which is not happening. I am more concerned about the private companies. It is happening more frequently. This is what it is actually non-genters employed. I'm not getting you what you are saying actually, Savitri Rao. I'm not following exactly the question. Could you elaborate here? Yeah, I'll allow you to speak once we finish the discussion, then we can talk about it. Yeah, please wait. Then again, non-disclosure of the DIN number in the company document. Whenever you are filed the company document, you are required to affix the DIN number, which is not there. When you are actually signing the document, DIN number is to be affixed, which is actually not happening. But anyway, here it is so happen, since the directors are not very much familiar, etc. and other thing, and not because people have to told, which has not happened. ROC is levied a heavy penalty actually in this particular case. And ultimately what happens is ROC penalty has been revised by the RD ultimately, and RD has given 6.5 lakh rupees penalty has been levied upon the 3 directors, but ultimately ROC reduced to the tune of 15,000 rupees each. He has brought it down in this particular case, recognizing that this has happened like that. Similarly, board report did not disclose the internal complaint committee, which is required to be done under the post record. So here also the MD, CFO, CS, all those people have been actually penalized to that extent. That is what it has happened. Financial statement and annual report also delayed filing. We have come across many cases, but only thing is, yes, there are cases where within 30 days of the issue of the show cause notice is filed, then compliance is taken for granted, no penalty is levied. That cases also I actually come across. You can see the second case here, which has actually happened. That is there. And again, not following the accounting standards, then again penalty has been levied. Then again, cash flow statement is not attached, penalty has been levied. And again, the non-filing of the statement on annual return, the CRP, when the matter is actually undergoing, then the CRP professional, liquidation professional, they have been actually levied the penalty because they are also equally responsible for ensuring the company during the time of the liquidation. That is what it has actually happened. Then again, we come across non-constitutional audit committee, wrong constitutional audit committee. In such cases also we have come across whereas the directors and all the KMPs, they have been actually penalized very heavily for this. In fact, Wipro Pari Private Limited, it has actually happened in this particular case. Penalty imposed here. KMPs was there. He has been actually imposed a penalty. CS and CFO both were actually penalized in both the committee, audit committee and the remuneration nomination committee. Irregular appointment of the additional director. This is what has happened in this particular case. So here also again, the directors and KMPs have been penalized. Women or director is not appointed where it is required. So there also we come across like that. Then again, non-appointment of the independent director within the time, that means 6 months time. Or the position become vacant, you are required to fulfill the vacancies within 6 months time, which has not happened here. A, non-appointment. B, wrong appointment. C, appointment not happen within time. All these cases which has actually come across increasingly, the directors and KMB, they are held responsible for this. This is what it has happened. So these are all the cases which we can actually go through. You can see the number of cases. Mostly if you see, these are all companies, either in the private companies or the unlisted public companies where it is converted, etc. Internal auditor appointment is called for, not done. Then delayed intimation of the director resignation, that DR toll is not filed in time. That was actually there. One thing is there. Let me tell you one thing. Do you think if you actually file the form delayed, that is actually a complaint? Do you think? What elaborately, what irregularity of the committee appointment of the additional director? Irregularity of the additional director you want to know, is it? In fact, the additional director in this particular case has been actually appointed. 1 minute. Let me check out whether I'm able to immediately. Just give me a minute. Yeah, here what happened, the company actually appointed an individual as a managing director and CEO. In fact, if you know the procedure is appointing a person, you cannot appoint directly a person, the managing director or something. First, you have to appoint the additional director. Once the appointment of the additional director take place, then only you can designate him as a managing director or CEO, whatever it is actually. In this particular case, that does not happen. Without appointing the additional director, they had directly appointed the managing director. That is what it has actually happened. If you are actually interested in going through this case, I'll tell you one thing. I have written an article on this, which is appearing in the tax fund. Really speaking, I'll give you the reference of this particular case, which is actually, or rather, I can give you the reference of the case also. The case is actually order in appeal passed by the regional director, SCR Hyderabad. Okay. In his order, you can say they got an appeal, they got the things actually reduced, which is actually there. It is a company called the Chaitanya India Fin Credit Private Limited. That is what it has happened. The original ROC order has been actually passed somewhere in the 5th July 2022. They have actually passed an order. That is what they have actually done here. Of course, this was actually applied with the RD. RD has got the reduced. They have directly appointed the managing director instead of going through the additional director appointment first and then designating him with the managing director. That has happened. Yeah, since last year, the word significant accounting policies has been replaced with the word material accounting policies. Now it is vague and open judgment and discretion of the person. It would be difficult to contest the claim of the arbiter. You see, question is whether the accounting standard is applicable or not, whether it is followed or not, is equally the responsibility not only by the company but also the statutory auditors. That is one thing is there. Really. Anyway, whether it is a significant or material, whatever it is, if the accounting policies are applicable to a company, it is applicable to the company. We will not actually follow, you have to go by that. There are n number of accounting standards issued by the statutory Chartered Accountant Institute, and they also issued the guidance note for that also. If there is a doubt is there, we have to check with the concerned people, take an expert opinion. That is what we need to do actually in this particular case. Of course, non-appointment of the women director, we discussed in the past also, which is also trusted to the company. Independent director, within time we talked about, I think these are all we talked about. Then coming to statutory register. Who is responsible to maintain the statutory register? If the company secretary is not there, it's okay. But the thing is, the directors have to be informed. No, it is a thing which has not happened. Even you have the register, but it is not updated. It is an incomplete register. Details are not actually filled up. That is the thing. This is what it has happened. And the company is actually established. There is no signboard outside the register office of the company. There also it has been actually happened. And again, failure to enter the RPT transaction in the register, MBP4 register. You have a register, but the details are not entered actually. That is the thing. Then again, I come across with the late filing, non-filing. So many issues I come across, especially MGT 14 form is not filed. This is what it has actually happened in one of the cases. In this particular case, the heavy penalty has been levied, but of course they got, as you know, when you go to the RD, you get the concession done actually because it has actually happened here. This is one thing which has actually happened. Because you see, statutory is also our institute has brought out elaborate guidance note, which is actually there. There is also a secretarial standard is there, although it is not mandatory, it is voluntary, it is there actually. This is what it is. Then again, delayed intimation on alteration of the share capital, again, penalty imposed on the directors. Beneficial ownership form also I come across like that. NCLT order has been filed. That has not been actually filed with the ROC within the time. There also, because once you receive the order, then it is very clearly said you need to file within the ROC within the specified time limit. That is what it has happened, which is actually not happened. Not only that, if you go with the secretarial auditor, I already said initially I touched upon the SR Shipping Corporation case. Second audit report is issued in violation of the Companies Act because company not maintained the minute book, board, audit committee meeting, etc. He has not reported. 2 lakh rupees has been penalized actually. Then again, secretarial auditor in the Sun Pharmaceutical, initially I touched upon RBT transaction. He has been penalized against this. Then again, the PS3 filing, this form has been actually filed. This is actually, that's what I said actually, this is incorrect figures certified. So there also he was actually penalized. Defective form has been actually filed because incorrect certified. Figures actually, somewhere right interchange, 886,066 ton. Instead of that, it is 88,06,800. See, very minor mistake it has happened. So here also it has been actually penalized. Then again, AOC 4 form, which has been actually filed here. Erroneous turnover reported, which is certified by the practicing company secretary. Because when they filed the form, the turnover was actually reported, which was wrong as per the HSC ITC code. Instead of typing in the top line, he has typed in the below the line. It is interchanged actually. So automatically it reported the wrong figures in the wrong places. That is what it has happened in this particular case. Of course, as we have been discussing, few cases where the RD has given the relief actually, you can go for the RD, you can get the relief because there's an appeal order passed by the regional director in Hyderabad. There was the regional director. He has actually reduced the penalty from 3 lakh rupees to 1 lakh rupees for financial constraint. This is what he has said. This is a genuine reason put up by the company. They have the financial constraints. They have the unintentional delay, which has actually happened. It is like issue of the delayed share certificate. That's what it is happening. In another case also, there was a Section 8 company. So he has reduced the penalty from 6 lakh rupees, 60 lakh rupees. They were doing a charity services, etc. And other thing and all mistake has happened. Like that, they have actually done. So these are all certain things which are actually happening. So we have to be very, very careful on this. I don't want to elaborate anything more than that. Then I think, although we were talking about the ROC orders, I cannot just leave aside. I think both appointment and additional director MD CEO can take place simultaneously, whether shareholders' approval can be obtained by way of the one resolution or 2 separate resolutions. You see, one thing is there. When the appointment is actually taking place, you can take, but there is no question of simultaneous appointment. First resolution is additional director. Once he is appointed the additional director, then he is actually designated as the managing director. That is the step by step. When you file the form, then the board appointment is always additional director and the shareholders appointment is always a director. So once you file the form, board appointed him as additional director in the first form which is required to be filed. Then he is designated as the MD in the second form. That is actually redesignation of the name. That is what it is required to be filed. So that is what it is required to be filed there. But when it comes to the shareholders' approval, shareholder is actually appointing him as a director from the additional director. Because although He designated MD, he still remains the additional director. Here actually what happens is the shareholder appoint him as a director at the annual general. That is all. In order passed the NCLT regarding the merger, only one subsidiary, the other group companies, in this case, subsidiary company need to file form INC 28. Yeah. INC 28 is required to be filed against the company in which is filed. That is there. Okay, we are now left out with what you call, I cannot actually leave listed companies. As you are aware, listed companies are actually regulated in addition to ROC. No, the company is not part of an order, it is not. See, order received by the company, they are not actually file it. That is it. Yeah. So naturally, what happened? We cannot leave aside the listed company, because the listed companies is really speaking is governed by the capital regulators. So nowadays, if you actually look upon listed companies are actually bound to by adhering the board meeting agenda items, the matter is to be taken care of, all those things which are there in the listed companies. So what they are doing is in listed companies also, they go by non-compliances relating to various issues, and they take up the matter. They pass an order. They have the adjudication officer who's there actually in the SEBI, and they take up the matter. Of course, anything can be appealed against them to the SAT actually. That is appellate tribunal of the SEBI, which they can actually go for. So really speaking, in case of the listed companies, I thought I will take some of the cases which has happened in the listed companies so that we know what is the listed companies are also governed by the market regulator, how the market regulator is actually looking upon the case. So this is one of the order. Multiple LODR violation which has actually taken place, because it is mainly, you can see regulation 31 shareholding pattern, because they have actually come across is a Bombay Stock Exchange order, non-appointment of the company secretary, non-appointment of the independent director. Okay, all those things which are there. In fact, they saw the waiver under the various exceptional circumstances. There is a circular is there, but it is not applicable in this particular case. So in such a case, they can limit the penalty. If you see the penalty here, it is amounting to so much. Section 31 penalty, shareholding pattern, there is a non-compliance. Financial result, there is a non-compliance. Corporate governance report, there is a non-compliance. Then again, annual report, there is a non-compliance. They are not taken the adequate step for resolving the investor compliance. Then voting rights, section 40, regulation 44, there's a non-compliance. Then again, appointment of the qualified CS as a compliance officer has not taken place. All the things as actually there. They went an appeal. They represented the extraordinary circumstances, sitting the waiver, etc. They said whatever is actually carved out extraordinary circumstances not applicable in this case. They have to make the penalty payment. That is what they have actually done in this particular case. Stay updated with the latest corporate law. Subscribe to our YouTube channel. Sorry, I think something has gone wrong. So again, composition of the board, appointment of the woman director, constitution of the audit committee, remuneration committee, all the things are looked upon by the market regulator. They have levied the penalty in such cases in case of the listed companies. Then again, appointment of the qualified company secretary had not taken place. They have levied the penalty. Then again, in case of the buyback regulations, the matter was actually decided and it went to Supreme Court against the company secretary's liability. Whether the company secretary is actually liable in case of the buyback issues, which is actually there if the error is there, because there is a pattern error which has actually happened place in this. So disclosure requirement and the buyback regulations. So what is the role of the company secretary? That is the issue which has actually happened. So here the compliance officer is required to ensure the compliance with the buyback regulation. That is what it is actually there. Whereas the disclosure and other things are all made by the directors, which actually came out. So what happened? Supreme Court has taken a call. They have actually directed the SAT to relook the matter in this particular case. I think the matter is still pending. I have no clue about that, what has actually happened, the final outcome. That is what it has happened in this particular case. Okay, with on. Okay. Then Shankar case, you are all aware, it's a very old case of 1956 case, because question actually has come whether company secretary can be held responsible for the accuracy in the financial statements. This is the question which has actually come, because he is only authenticating and he is not the person who is there. But here actually, if you look at it, he has to see the compliances, but not the figures. Figure is concerned is actually coming to CFO of the company, because CFO is actually handling it. But anyway, in this particular case, it's a 1956. It may not be holding good in today's case actually. Today CS is designated as a KMP. and he is actually liable along with the director if anything goes wrong. That is the change in position which has actually come. In 1956 Act, it was actually good. So that is what we can say. And similarly, in one of the cases, SAT order has actually held a non-disclosure of the trading window, penalize the company secretary. And again, in another case, what has actually happened is non-compliance regarding regulation 12(2). So here also the company secretary levied the penalty. Although the company secretary has actually resigned, he represents the matter. He said he is resigned, he is not involved day-to-day operator, day-to-day affair, etc. Another thing and all, that is what he has represented this matter. But since he remained as a company secretary, he was levied actually. Then the Jairam case also, as SEBI has slapped about 5 lakh rupees on a Satyam Computer Sales not closing the trading window. But when the matter went to SAT again confirmed it is the responsibility of the company secretary. He confirmed the order because after all, we are actually there. That is the thing. And again, improper approval of the related party transaction. Here also the penalty has been levied initially 25 lakh rupees, which has been revised by 10 lakh rupees in the appeal, which has actually happened. I think with this, I come to an end of the discussions as far as today is concerned. I would only say be the change you wish to see in the world, which our father of nations said. So naturally, when we are talking non-compliance, etc., and other thing and all, we need to be more equipped. We need to be more clear on this. That is what it is required, actually, really speaking. With this, I think I come to an end of the discussion. I take the opportunity for thanking you. Now I'll close this sharing. Any questions, etc., we can actually discuss. You can take it up. Stock exchange intimation that the board agenda included the dividend recommendation, e-board meeting approved a dividend and later government changes to the TDS and other requirement. Dividend board meeting held the next day. Prior intimation was given to dividend intimation was later given to the government change TDS, other requirements. Dividend board meeting held on the next day. Prior intimation was given to the board meeting but did not have the dividend agenda. But the board discussed the dividend matter apart from any other matter and recommended saying dividend AGM approved. SEBI gave notice that there was a violation of not intimating dividend projection advance. Is this a fit case for the SEBI violation? Yeah, of course. Because there is very clear any particular item which are required, you need to give the intimation as per the listing regulation, which is actually signed. If you go by the listing regulation, it was mandatory. You cannot take it just casually in any other item. So it is definitely, the intimation is actually called for. There is a minimum period of intimation is required to be given to the notice. It should be made aware to the public. That is actually there. If it is not followed, yes, it is definitely call for the action that will happen. Okay. Anybody is interested in raising the hands, etc., you can ask the question. You are most welcome. I think Savitri Rao was actually wanted to ask a question at that particular time. I think I said we can talk later. That is what I said actually. Delay in remitting the dividend to the overseas holding court due to the RBI FGGR compounding valid reason for not relieving a penalty. See, much will depends upon the circumstances of the case. If one regulation you are not compliant with, the other regulation is actually preventing you to that, how can you actually justify? You have to get right. Then you have to actually go through, set right the things, because compliance is the compliances, isn't it? Extension given for AGM 2 months a day. Yeah, AGM extension is actually given. The ROC has got the permission to give not more than 3 months, but on merit-based cases, it is actually there. Due date 30th. So last duty is holding the extended